Sell-off overdone. What's me now? Fox Business's Susan Lee. Susan, everyone on the street now is saying it's going to go a lot lower from here. What do you think?
Well, I just want to tackle the retailers first of all, Charles, because this is macro becoming micro, meaning the record high gas prices, higher wages is finally biting into the profit margins of some of these retailers, and they've been unable finally to pass it on to the consumer. This is what we call price elasticity. And you heard that from Walmart CEO yesterday. He says consumers are still spending, but there's a point at which they are willing to opt for the cheaper options here, especially with those private labels. Target CEO says that the consumer is still strong. But what they're willing to pay for right now are experiences instead of the basic goods. I think it's interesting that also Target and Lowe's, part of the sell-off today, yes, they missed on profit, but they kept their sales guidance intact for this year. And you know what that tells me, Charles, is that these companies, they will be forced to eat some of the higher prices and inflation and not be able to pass that on to consumers.
No, there's no doubt about it. And again, that's why the dollar stores are getting hammered. Ironically, their revenues have probably set records, but they're not going to bring any of it to the bottom line because producer prices have outpaced the consumer prices. The irony, of course, is we keep hearing in Washington, it's all about profiteering. It's not about profiteering. Look at Target stock, down 25% in a single day. Now, here's the thing. Recession, right? One of the big guys at Guggenheim said we're going to be down 45 to 75%. Are we already in one? Do we, how much work does the Fed have to do? There's so many question marks out there, Susan.
Yeah, well, I'll tell you this, is that stock markets seem to be pricing in a 70% probability of a recession. You heard from Janet Yellen, the Treasury Secretary, this morning. She talks about a strong household and consumer because they're still cashed up. They've been unable to spend. And you've been able to see some of these companies, they've been raising prices. Look at the airfares that you're paying up 20% from month to month, rising at record paces. Now, I'll tell you this also is that there is some optionality out there, meaning that, yes, we're pricing in a 70% probability of a recession. But the Fed, they could, and you heard that from Jay Powell yesterday at the Wall Street Journal conference, is that, yes, they're behind the curve. They should have raised interest rates earlier. But there is optionality in that if they see that the stock market is doing the work for them, which it seems to be, given that we're down 1,200 points, they could take their foot off the pedal. And, that would actually be, I would say, positive for risk assets out there. And it's been pretty orderly, don't you think? I mean, look at the volatility and the fear gauge. It's gone nowhere in the last year or so. In these type of sell-offs, and especially if there's panic, as you've seen in 1987, since we've been referring to retail stocks in the worst days since that Black Monday, it's been pretty orderly. And people are not running for the exits, and nor is there that huge volume to sell in these markets.
The irony, though, is that Wall Street believes that's the problem. They think that the retail investor has to suffer more, has to blink more, has to so-called puke it all up, panic. They will actually think that's going to be the buy signal. And until we get that volatility, until we get that volume spike, Wall Street's saying we're going to go much lower, and that's what's concerning me. Doesn't have to come to fruition, but that's what folks on the street are looking for.
Well, stagflation is the word, meaning that we're going to be in this period of stalling growth, higher prices, and how the companies react and how cashed up they are will determine where markets go.
All right, Susan, thank you very much. Appreciate it. Now let's go to Pennsylvania, where the